order failed.
Tokyo markets are bubbling with speculation about a mystery man who's making millions betting on stocks known only as CIS.
Well, this guy turned $30,000 into $300 million in 8 years. Yes, you heard that right. This is a true story. This readily shows that one can actually live off day trading if you do it right. So who is this guy? What's his strategy? Can I replicate it using an algo? In this episode, I will attempt to recreate one of his strategies and see what I get. Before looking at his strategy, let's learn a little bit more about this guy. So, who is this CIS guy who moved the Nikkei index, a legend in Japan and a video game champion? Bloomberg report describes him as a well-controlled gambler. Well, we all know that there is a very thin line between gambling and day trading, depending on who you talk to. Well, CIS, which means death in Japanese, is his gaming handle. He was a gamer first before becoming a trader. It was through his gaming experience that he developed a winning psychology and remarkable pattern recognition skills, which he readily incorporated into his trading. You will be surprised that there are many similarities between video gaming and day trading. For one, they both have to know who is on the other side. Risk tolerance, the winning mentality, above average emotional control. Need I say more? In 2014, Bloomberg News reported about a mystery man moving Japanese markets. His story was covered by many media outlets. He shared his 2014 account statements in addition to his tax returns. His brokerage statements showed liquid assets ranging from 4.4 billion yen to 4.8 billion yen. His tax returns also showed that he traded 1.7 trillion yen worth of Japanese equities in 2013. At that time, this was about 1% of all share transactions done by individuals on the Tokyo Stock Exchange. Apart from his friends, no one knows his real name. CIS has a large following on social media with nearly 600,000 followers on Twitter who track his comments on trade, which in turn can cause spikes in Japanese equities. When he's not trading, he's gaming. CIS brought all his gaming experience into trading, and naturally he started out as a scalper. He was in and out of his positions very quickly. To be a good trader, one needs to know and understand who is on the other side of your trades. At the age of 21, CIS had saved $30,000 and he made his first steps into the markets. He actually studied mechanical engineering and worked in a relative's company for a while before he gave that up. At first, he bought shares in undervalued companies, and at one point he actually used his parents as guarantors. But soon he realized that he wasn't going to be making money very quickly, so that's when he decided to jump into day trading using a scalping strategy. But what is scalping? Using leverage, scalpers go in and out of the markets very quickly. They can hold a position for as little as a few seconds to minutes. This means that they make hundreds of trades per day. Scalping can be a very expensive endeavor, and if not well capitalized or managed well, it can lead to huge losses. Like every other trader, CIS experienced losses initially due to limited knowledge of markets, but then who hasn't? Despite repeated losses, CIS did not give up. That's when he met another legendary Japanese trader called BNF and started studying trends and patterns. So what's his strategy? Well, I'm not privy to the complete strategy. From the materials online, CIS started out with a 30K account. He used a 5 and 25 period moving average crossover on a daily time frame to gauge market direction. He scalped as well as held on to winners. He used momentum, he scaled into positions, he used tight stops. I will assume he only traded regular market hours. Given my understanding that moving average crossovers on its own is a losing strategy, I will assume that he used some form of filtering indicator or a filtering method in order to avoid the whipsaws. For this example, I'll use efficiency ratio indicator to stay out of range-bound low liquidity markets. For scalping, some people use the depth of market or a very short time frame for price granularity. In my case, I used the Renko chart. Scalping is about optimal entry and exit. It's about speed and accuracy and no second guessing. Here is this strategy being traded by an algo. As a human, I do not have the speed and accuracy of this algo. If I'm to trade this manually, I know that I'll not do as good a job as it does due to latency and second guessing. If you are interested in following this algo to see how it performs, please sign up for a free access code. Now let's take a look at backtested results for this strategy. This one is for NQ Renko chart. As you can see, it's a desirable equity curve. However, when using Renko charts, one has to be careful, as not all Renko charts are created equal. Here I'm using Shark Indicators backtested Renko charts. The next curve is an NQ 13-minute chart. As you can see, whilst positive, it's not exactly desirable. The next one is a 15-minute chart. It's quite good, isn't it? The drawdown is acceptable, except towards the end then. This one is a 20-minute chart. While it's positive, it needs more work. This one is a 30-minute NQ chart. It's okay, acceptable. However, as the time frame increases, this strategy begins to fall. This one is 45-minute chart, and then 60, 120. 120 is not bad. And then 240 when it completely falls over. As you can see, this strategy is viable. However, bear the following in mind. In algo trading, it is important to know how the bars you are using are created. Otherwise, your strategy will not work. 2. Even if you have a brilliant strategy, it doesn't mean that one can trade it successfully, especially if you're a manual trader, unless you know the parameters. 3. Money management or risk management is paramount in achieving a positive yield curve. 4. The time frame you are trading is important. Renko bars ignore time. 5. Time of day is just as important, as this affects the volatility of price movement. The above strategies suffers at regular open at regular hours open for various reasons, that is internet speed, therefore the latency. So it's best activated after the first 30 minutes of regular hours. By no means am I saying you will get the same results as in this video. If you are interested, set it up in a demo account and see how it fares. Definitely backtest it before putting it in a live account. To follow this strategy live, I enable it between 9:30 to 12 p.m. Chicago time and between 1 and 3 p.m. Chicago time. To get a free pass to the trading room, email info@tscedmonds.co.uk. The email is in the description below. Please hit the like button if you found this video interesting and share it and subscribe.